Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally.
Jerome Powell, let me tell you, folks, this guy is about to come out of the closet, and he's going to make it pump like you've never seen it pump before. Even Jason Casper agrees. By the way, make sure to check out his YouTube channel. He's getting huge.
All right, y'all, we are live on this beautiful Wednesday, FOMC day. God bless everybody in the name of Jesus, Yeshua the Messiah. I do pray you and your families are super blessed. As Bitcoin right now, guys, well, is finding some nice support on this trend line, this very important yellow trend line. And as we know, in about an hour, we are going to see our good friend Jerome Powell come out the closet, as our good friend Trump just said, and make the decision for the federal funds rate. And you can see most people are forecasting a 25 basis point rate cut, which is a little bit bullish because, as we know, when interest rates come down, well, that usually means risk assets such as Bitcoin, stocks, go up. Is this going to be bullish or is it going to be bearish? Well, we have some mixed signals on the chart and we're going to be talking about it today leading up to the decision. We're going to watch the volatility ensue, and then we're going to stick around for the press conference where I will be doing the sign language as Jerome Powell answers questions talking about whether or not he is bullish or bearish, dovish or hawkish, okay? Because you use different kinds of animals depending on what you're talking about here. Gotta give a major shout out to everybody in the chat. God bless everybody. Make sure to smash up the likes. We are so close to giving a $1,000 giveaway. We get 1,000 likes within the first half hour. We will be giving away 1,000 US dollars, USD tether. 1,000 USD tether. All right, this is absolutely crazy. As you guys can see, you know, we're still long and strong on Bitcoin right here, baby. We are long and strong on the Bitcoin, and I do expect crazy volatility to ensue, but I do just want to point out the fact that we are back testing right now a major trend line. All right, a major trend line here. If we hold above this, we are going to expect higher prices, $110,000, $113,000, or even more, potentially. All right. By the way, guys, got to give a major shout out to the Casper Crew VIP Discord because this trade setup wasn't given in advance. If you want to join the best community, jasoncaspertrading.com. Also, right now, BLOFIN, guys, 10% cash back. Link in the description. MEXC, best deal on fees. Link in the description. Weeks, best deal on fees without KYC. Link in the description. All right. I think we've shilled all that we need to shill right now, guys. So let's talk about what is happening here. But first, I do have to shout out everybody in the chat. Thank you guys so much for tuning in. Shout out to Ted Researcher. Shout out to Average Crypto Dude. I also got to shout out your Average Crypto Bro. Shout out to Malisha, who says hi to you. Shout out to Fel Project. European time. When is FOMC? It's in about an hour. The rate decision will be made. All right. We're going to be sticking around all day. It's going to be a long stream, guys. All right. Got to give a major shout out to Yishai Ben David. What is going on, Yishai Ben David? Shout out to JK. Shout out to TY Fox. Shout out to Splashfire Films. Walking backwards with a plunger. Don't you know it, guys? On the Jason Casper YouTube channel, we walk backwards with our plunger, and when the price doesn't do what we want, we torture ourselves by giving that plunger a lick. And it tastes gross. All right, it tastes gross, but you got to do what you got to do when you're a YouTube crypto guy, all right? Shout out to Jay Schlongen. Shout out to Ruben. Major shout out to Crypto Coons. Guys, make sure to share the stream. If you can share the stream on Twitter, on X, that would be absolutely amazing. All right, it will help get people in the stream so we can do our giveaway, so we can have a good time, so we can get the information out there. Because if people, there's one thing people need to see right now, is this. Okay, so make sure to share the dang stream. Shout out to Ruben, who is beer. Shout out to Billy Magic. He says, don't trade and drive. Jason. Yeah, shout out to Yo. Shout out to Dave Flowers. Shout out to Impacto Scalping. Massive shout out to HFG. God bless you, bro. Shout out to FitGenius618. Hawkish or dovish. Yeah, that's a good question, right? That's a good question. Major shout out to Red Elephant. Major shout out to Crypto Incognito. Major shout out to Ronan Crypto Queen. Sorry, I can't read the font, all right? It's a little hard to see. Shout out to Chris Freeman. Shout out to Traffic Light Trader. Are we going to pump? I hope we do pump, honestly. I hope we do pump. Shout out to Alien World, who says, baby, let's go. Shout out to Nor Games and Lobo, who says, text green, game over, text green, game over, text green, game over. My bed, make you better every day. Turn on the pump song, baby. We might have to do a pump song, all right? Major shout out to Diego Rodriguez as well, Gary Pooney as well, Marek. Shout out to Marek in the chat. Thank you for the blue face smiling. Shout out to Xena Productions who shared. Major shout out to Aaron G, holding it down with the wrench. All right, thank you so much, Aaron G, for being a mod in the YouTube channel. I really appreciate it. First Coast Crypto, what is going on? Haas New Gaming, what is going on? Hoping there's a giveaway today. It's looking good, guys. We got 1,600 people. We only need 200 more likes. I think we're going to get to do the giveaway today. All right, Fart Coin, spam the chat and get timed out, says Aaron G. So keep that in mind, guys. All right. How much will they cut? Like last time, 25? See, here's what I'm thinking, all right? I do think that they are going to do the 25 basis point cut. But we will have to see. Here's the deal. If it turns out to be lower than 4.5%, I think we could see a big old pump. All right. If, let's say, they keep it the same, that would be pretty bad. Now, I do want to talk about some potential warning signs on the charts. All right. Before we get overly excited. Well, first of all, let's look at the stock market. This is the S&P 500 right now. This is the ES mini futures, and this thing is, objectively speaking right now, forming a squeezing pattern, all right? A squeezing together pattern. And as we've seen this squeezing pattern, I mean, what can we say about the oscillator? There's no reason to think that we're going to continue, that we're not going to continue to the upside right now. But when you see squeezing like this, it means a big move is about to happen. All right, we are squeezing for a big move about to happen on the S&P 500, and typically big moves do happen after one of these rate decisions. All right, the last time we had a rate hike, a rate cut, I mean, we did see a lot of volatility. Let's take a look at the Bitcoin price as well. All right, because right now Bitcoin, as we know, is back testing this major support resistance flip right now. We've got this trend line on the chart right here, this green trend line. We are bouncing from it. We know that if we hold above this green trend line, we are going to pump like crazy. But if we lose this green trend line, guys, we could come down quite a bit. We could actually come back down to the lower trend line, just below $100,000. Now, a few warning signs here for Bitcoin. I'm not bearish. You guys know I'm very, very long. How long am I? I haven't measured in quite some time, but I am quite long. I mean, I've literally got about $400,000 long right now on Bitcoin. All right, I'm in multiple long trades on Bitcoin across the board. All right, I've got about $320,000 open over here. I've got about $80,000 open over here on MEXC. All right, right now we are up in profit about 29 plus 32. Let's just say we're up about $60,000 right now on the long side, right? If I were to close these trades right now, I'd be $60,000 more rich than I am right now. Absolutely insane, okay? We've already locked in $90,000, so we already made 90K on this, but I'm looking to make six figures on each of these trades, all right? I'm looking to make $100,000 on each one of these trades, so I'm super long, all right? My next take profit is $110,000. I want this to lay the groundwork because I'm about to give a bearish scenario as a warning, okay? Now, look, doesn't mean I'm bearish, right? I'm bullish, right? But here's the thing. We do need to be cautious. Why do we need to be cautious? Well, here's the thing. If this breakout and retest doesn't hold, and we actually do come back down inside of this wedge, well, we need to acknowledge the fact that yesterday I should say, we have confirmed a bearish divergence on the 12-hour time frame. And today, if the candle closes red or purple, I hope you guys are using purple candles and not red candles. It's better for your blood pressure. If the candle closes red or purple today, we will have a confirmed bearish divergence here on the daily. All right. And so it just wouldn't be a good look for Bitcoin if we close below this trend line with a confirmed bearish divergence on the 12-hour, on the daily, and when we go to the 4-hour, we are also seeing the money flow on Market Cipher B. As the price is getting higher, the money flow is coming out here. All right. So we know that bearish divergence is forming uptrends. It's normal. It's normal. It's normal. But what we don't want to see is the bearish divergences confirming with the price action also showing us that we're losing key support. So here's what I'm looking at. Today we expect the volatility to come in, right? We expect the volatility to come in. So we're going to just strip everything down here, and we're just going to look at this as objectively as possible and recognize that the market has established for us a fair value zone. All right, a fair value zone. All right, wow. Oh, okay, what is this? Hang on. I just got a voice message from the President of the United States about this upcoming FOMC announcement. Here's what President Biden had to say.
Now let me be clear. I've been dead since 2019, and every time you see me on TV, I'm either a deep fake or a body double. But folks, all scientists agree, Jerome Powell is alive and well, and he's about to make a massive move happen on these charts. So if you don't vote for me, then you ain't black.
Wow, I don't know what that last part was about. It got cut off a little at the end, but here's the thing. He seems like we are going to get a massive move, right? He seems to affirm a massive move is in fact coming for pretty much everything, right? He says it's going to be massive. So we're just going to strip this chart down, and we're going to discuss what are we looking at here. This is where the entirety of this rising, this wedge pattern, like we got this thing right here, right? So let's analyze what's been happening within this. You could draw this a few different ways, right? You could draw this a few different ways. We're going to look at all the volume, okay? Right now, the major support is going to be between 100,000 and about just below $98,000. In fact, I would say major support right now is going to be right around here, this high volume node of the range. The reason is because if we take our Fibonacci golden pocket from the low to the high, you can see that the 786 and the 886, I'm sorry, the 618 and the 786 are coming in right in this zone here. And so if we're going to get a dump and pump, this is the level that needs to hold. In fact, I'm itching. I've got an itch. In fact, my wife told me I should go to the doctor to get it checked out. I just can't stop scratching this itch to open up a fresh long from this area. In fact, if we come down to this area, man, I'm going to open up a freshie right over on BLOFIN. Speaking of BLOFIN, 10% cash back, link in the description. If you deposit $1,000 to trade with, you get $100 extra. Now, of course, only do this if you know how to trade. All right? I might also do it over on Weeks, which has the best fees with no KYC. All right? See how I just sprinkle in the exchange shilling in with my content, man? A professional. I learned it from Carl from the moon himself. By the way, me and Carl do have a video coming out very soon. Here's the preview.
Hello, I would like to get a Big Mac meal.
Yeah, I'm excited for that movie. Honestly, filming it was quite fun. I actually got to meet Carl. We got to drive the Maserati right to McDonald's. I did eat the Big Mac. People asked, Jason, did you eat the Big Mac? You know, thought you were eating healthy. Look, man, when Carl from the moon gives you a dang Big Mac meal, you eat the dang Big Mac, okay? Now, this is the long trade I am itching to get into, okay? Because here's the thing. We know that as long as we can hold this key support, things are looking great. We take our bottom trend line. We are seeing that this is the major support that must hold here. So if we get a dump and pump operation where, you know, when the news comes out, right, immediately comes out, we get the big move right away. If it dumps, this is what we're looking for. Okay, this is what we're looking for. If this does not hold the support, guys, we do need to be open for something like this, basically coming back down to the bottom of this sideways range, okay? This trend line is very important. We don't want to lose it. So the next place we should be looking for a juicy long in the event of a dump when the news comes out. A 5% dump. That's actually not too crazy. 5-6%. That's pretty normal. We've seen dumps like that before. I mean, literally when we had that scam wick the other week, it was a 13% dump. In this consolidation, we've seen, you know, 8-9% dumps. This is nothing too crazy. So if we do get a bit of a dump today, and this bearish divergence, let's say, plays out throughout the next day or two or so, that 97-ish, let's say like 96.5 to around $99,000, just under 100K, that's going to be major support. If we lose that, we do need to be open for a move down to the bottom of the range, which is basically to take out the lows at around $85,000. Right? We're going to strip everything down once again, remove all this, remove all that, remove all this, and we can see that, yeah, all the liquidity down below us, basically, is going to be below these lows. So we would need to be cautious for a move down to here, where then we could look for a big old bounce. Now, there is a chance that we just pump like crazy. Now here's the thing that we need to be aware of. Typically, when the news comes out, we get a big old Darth Maul candle, which takes the liquidity from the lows and the highs. So right now, what we really need to be aware of is simply this, guys. Is simply this. We do have some highs right around here. If we start to pump, we need to be aware of simply just taking out the high that we made yesterday, just to come back inside of the range a little bit, right? Like in the short term, when the news first comes out, we also need to be aware of taking out these lows from around this area here. Okay, because you can see we have a major support resistance flip right here. Resistance, 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 and then flipped into resistance, flipped into support. Now we're building liquidity under here a little bit, right? And so if we get a move down here, we need to be aware of something like this and back into the range. So right away, when the initial news comes out, what we need to be aware of, especially if you're a scalp trader. Now, I'm not telling anyone to do this. This is not financial advice. It is risky to trade news like this. But it wouldn't surprise me if we get some kind of a candle that does something like this, where we actually get a big move up or a big move down, right? Then, once the dust settles and once the press conference comes along, and he starts flapping the old gums talking about whether he's dovish or hawkish, how he feels about the economy, then I think we're going to see the market start to make a decision, all right? So both of these instances here could be the weekly high or the weekly low, honestly. The weekly high or the weekly low. A lot of times, Wednesday is the day where we do make the weekly high or the weekly low. And then in addition to that, we have a news catalyst that is going to facilitate this price action. So these are the two major things we need to be aware of right now. So we're going to go ahead and put this in a folder called short-term volatility. All right? Short-term volatility. All right? Short-term volatility. All right, did I spell that right? Don't know, don't care. Don't know, don't care. Okay? Short-term volatility. Then, once the short-term volatility is over, we do need to be prepared for, hang on, I gotta move this stuff into the folder. Then we do need to be prepared for the bigger time frame levels. All right, the bigger time frame levels, of course, if we continue to the downside, is going to be around that $96,000, $97,000 zone where we have the high volume node of all of this, confluence with the Fibonacci golden pocket local, 786 local. All right, so this is going to be our major support, major support one. All right, right around there. And we could drag it down a little bit to that daily order block. This will be major support number one, where we are definitely looking for a bit of a bounce. And then major support number two, guys, is going to be back down, in my opinion, at the bottom of the range. Let's quickly pull a fib from low to high here. Yeah, major support coming in right around 97K. Major support. Then let's pull a fib from this low just to see what we got going on. Okay, we got that 786. That is important. Yeah, this is going to be so major. We don't want to lose. All right, we don't want to lose. We definitely don't want to close the daily candle below this green box here. So I'm going to put this in a folder called major support. Major support. Explanation point. Major support. Major support. I hope you don't get hort at major support. Hope you don't get hort at major support. All right, wow, we got 2,500 people in the house. We got our 1,000 likes, so we will be doing a $1,000 giveaway at the end of this stream today, all right? So don't spam the chat now. We're going to be giving away $1,000. Stick around till the end of the stream, all right? Stick around till the end of the stream. We got to give a major shout out to our super chats in the house right now. All right, let's see who we got in here. Let's see who we got. Shout out to Serdone Official. He says, a hot dog with ketchup. Thank you so much for the hot dog with ketchup, my man. Thank you so much for the second super chat. Thank you. God bless you, man. Hello, my friend. Serdone, hello to you, my friend. Thank you so much for the super chats. Shout out to 70s Dude. He says, LFG Billy, love the streams. Well, God bless you, 70s Dude. Thank you so much for being here. Thank you guys so much for smashing up the likes. Epong TV, will Juanita reject us again? Shout out to HFG. Shout out to BQ. He says, I have lost everything horrible before Christmas. I don't know if you're trolling or not because I know you like to troll, but I hope you're just trolling, my friend. Shout out to Crow. Giving your salary for crypto just to lose, and you can't afford to lose, is a stupid move. That's true. If anybody's doing that, that is kind of a stupid move. Shout out to Karan. Shout out to PK, who says, get a job instead of begging on the street. Shout out to Ale. I'm shorting full margin right now. Be very careful. Shout out to Omega85, who says, well said and 100% the truth. At Divinehood. Divinehood says, bro, if you wasted your whole salary trading with a 1-year-old, maybe you aren't emotionally ready to start trading. Man, that is the truth, honestly, guys. I mean, you gotta be responsible with this stuff. All right, let's check out some other assets right now. We did take a look at the S&P 500. S&P 500 squeezing, and what's so interesting about the ES is look at this gap here. We gapped up in between Monday and Tuesday. We gapped up about 1.5%. That is so crazy. Let's check out the S&P 500 index, the SPX index here, and see what we got. Okay, so SPS index. Interesting. Yeah, pretty much the same squeezy pattern, but we don't really see that gap. We are just squeezing together. Let's check out gold. How's gold doing? Gold, look at this, guys. I mean, gold is holding our major support zone that we had drawn right here quite a while ago. So this is quite interesting as well to see gold. Man, gold is just holding above that $2,500 level, which is absolutely amazing. It's amazing that gold is coming this high. And speaking of, guys, speaking of the Federal Reserve and these rate cuts, you know, why are we in crypto, guys? Why are we into gold? Why are we into crypto? Why are we into extracting money from the fake economy? It's because the economy is fake, guys, right? They literally can just make money out of nowhere, all right?
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally.
And so look at this gold chart. This is absolutely insane, but this takes us back to 1971 when Richard Nixon officially took the dollar off the gold standard. And when we look at what happens when the dollar comes off the gold standard, you might think to yourself, wow, the price of gold has really gone up about 7,000% since we came off the gold standard. It's actually not true. It's the purchasing power of the dollar has gone down this much since 1971. This is inflation. It's not that things are more expensive, it's that your dollar is worth less. It has less purchasing power. And the reason is because the Federal Reserve is devaluing the currency by printing more and more currency, and they play these funny games where they try and keep things under control by tightening and loosening the economy and raising and lowering interest rates and all this kind of stuff. But at the end of the day, guys, they are stealing your purchasing power from you. All right? This is why it's so important to understand how these markets work. This is why it's so important to be able to invest in these assets, because the way rich people get rich and stay rich and get richer is they know how to play this game. It's literally a game, guys. It's literally a game, right? So I don't put my faith in Bitcoin, I don't put my faith in gold, I don't put my faith in the dollar, but it is a good skill to be able to come to the charts and be able to extract from these markets purchasing power that can then be put into tangible assets like gold, like property and real estate and animals and growing gardens and all these kinds of things that you need to survive in the real world. And Bitcoin, obviously the best performing asset in all of history. It's absolutely insane to realize, you know, if you're in Bitcoin, it is insane to realize, let's see, from the beginning, we're talking, this is insane, 16 million%. That is crazy. Now, I didn't get into Bitcoin until 2016. So when did I get into Bitcoin? It was around 600 bucks. So right now I'm up about 16,000% on my investment through all the bull and bear markets. All right, these are all the market cycles. And speaking of market cycles, guys, we do need to prepare for the next bear market. You know, every single market cycle, Bitcoin bottoms out in between the 786 and the 886 Fibonacci. Every single one. Look at all these historic 1, 2, 3, 4, 5 market cycles, bull and bear. Every single bear market bottom happens right in between the 786 and the 886 Fibonacci. So if history is going to repeat, I don't know, I mean 5 times in the past, pretty much like clockwork. What we need to do is, you know, to determine where to really be buying Bitcoin next time. Let's say you didn't get into Bitcoin now and you're feeling the FOMO. You know, if we do, let's say come up to $145,000, then if history is going to repeat and we do the same thing that we've done for the past 5 cycles, we're going to come down to the low 40s. And that's where you really want to buy Bitcoin, at the low 40s before the next bull run. All right? So just throwing that out there, because now is the time to prepare for the bull market. And I was just talking to somebody the other day. We kind of can't wait for the bear market. Bear markets, honestly, are pretty fun, right? Especially if you know how to trade, and especially if you're excited for the next bull. All right? I've been selling Bitcoin for the past few months, realizing my hard-earned profits that I planned for during the bear. So, in about, let's see here, in about half an hour, Jerome Powell is going to come out the gate swinging, full-fisted, come out the closet, and tell us, are we going to get a 25 basis point rate cut? Are we going to get a 50 basis point rate cut? Can you imagine if interest rates come down to 4%? That would be very bullish. Or is he going to keep it the same? We're going to get a 0 beats per second rate cut. All right, Jerome Powell only deals with beats per second because he's a grindcore drummer, and all he does is double beats, double bass and blast beats, gravity blasts so fast. He only deals in BPS, not beats per minute, beats per second. An interest rate at which, no, that's not, here we go. Actual greater than forecast is good for currency. All right, so if the actual interest rate is higher than 4.5, that's good for the dollar. That's going to be bad for crypto, because the dollar and the crypto, they're kind of inverse, right? When the dollar is strong, risk assets like crypto is weak. If it's 450, that's pretty neutral. If it's 425, that's going to be bad for the dollar, which is going to be really good for crypto, because remember, we're measuring Bitcoin against the dollar. That's why when we take a look at the gold chart and we see the XAU chart over time here, right? Gold is going up. We're measuring it against the dollar. So gold looks really good against the dollar, right? If we were measuring the dollar against gold, the value of the dollar is plummeting, right? We could just flip the chart upside down. This is the dollar since we came off the gold standard, guys. Isn't that crazy? This is the purchasing power of the dollar since we came off the gold standard. All right, so we are holding support right here. We're going to take a quick look at Market Cipher B on the daily time frame for Bitcoin. All right, Market Cipher B, my favorite indicator. Major shout out to CryptoFace. Major shout out to Flop and Groper. Major shout out to all my crypto YouTubers out there. Tom Crown, Frankie Candles, Traders Reality, Trader Geo, Alexo Crypto. Whole bunch of others too. Sam Price, Crypto Lifer. Whole bunch of others. You guys know who you are. All right, so we're going to go down to the lower time frames. We're going to take a look at the order flow. So Market Cipher B right now on the 1 hour time frame. What do we have here? We have a nice big bottom with a big BitBoy, Ben Armstrong green dot. We have ourselves a higher low with a trigger wave having confirmed. We have ourselves the money flow getting lower. This, in my opinion, is potentially setting us up for a nice bullish divergence if, when the news comes out, we get a wick down to this area and then we come above this area. We will have what's known as basically a nice uneven butt cheek pattern on Market Cipher B. A juicy left butt cheek, a skinny right butt cheek. That is known medically as a bullish divergence. If you're into the medical literature, the New England Journal of Medicine, for example, you will see that they call uneven butt cheeks bullish divergences. That's the Latin scientific name for it. Myself being a scientist, I would know that, right? So we do need to be aware of this. Also, we do need to be aware, guys, in the event, let's say the interest rates come out super bullish, right? And the reaction of the market is a pump. We also need to be aware of this, right? The upside down, Sam Bankman-Fried, bearish man boob pattern, where you have the money flow and the momentum getting lower as the price is getting higher like that. Look at this. If we stretch out the Sam Bankman-Fried boobs, yeah. This is called a bearish divergence. Very scary, very dangerous. This could actually be, in my opinion, a local top signal, because if we get the initial pump and then a slow grind to the downside, we could start to see some of this liquidity get taken, all right? So I'll be totally honest with you. If we do see this happen, I'm going to open up a fresh short. I'll just be totally frank. I'm going to be frank, all right, to use a baby boomer term. I'm going to be frank with you guys. If we see this happen, I'm going to open up a fresh short. All right, super dang fresh. All right, we got to shout out some of our super chats in the house. All right, we got to shout out some super chats. We got a few. Major shout out to Ape. He says, take a look at Benji. And major shout out to Omega85. Enjoy your stream, man. Keep up the great work and advice. Well, this ain't no financial advice, guys. I'm just a guy in a treadmill, okay, with a purple hat. And what kind of glasses are these? These are actually Sherlock Holmes costume glasses. See, I have a Sherlock Holmes hat. I've got these glasses. And I've got my pipe. Because we are looking at these charts. Of course, we're looking at these charts here to investigate, to see where's the next trade gonna be, right? And personally for me, as many of us know, what I mostly like to smoke in my pipe are these adult diapers. Depends. Because the truth is, if you don't want to get liquidated as a trader, you can't go to the bathroom. As soon as you go to the bathroom to take a pee, the price is gonna move, right? So what you've got to do is you've got to wear Depends maximum absorbency to prevent liquidation. And so what you also have to do is you have to take one of the diapers, and you've got to rip a little piece off of it. You've got to put it inside your Sherlock Holmes pipe and take a smoke of that hopium, baby. It's harsh. Here's why it's harsh, guys. Trading on hope is only going to lose you money. We're not here to trade on hope. We're here to trade science, technical analysis. All right? And the science is settled right now. Every scientist agrees that when Jerome Powell comes out the dang closet talking about these rates, there's going to be a massive move.
Now, let me be clear. I've been dead since 2019, and every time you see me on TV, I'm either a deep fake or a body double. But folks, all scientists agree, Jerome Powell is alive and well, and he's about to make a massive move happen on these charts. So if you don't vote for me, then you ain't black.
And you know what? It's not only the left, guys, talking about the massive move. Even President Trump, the winner of the election, had this to say.
Hey, Jerome Powell, let me tell you, folks, this guy is about to come out of the closet, and he's going to make it pump like you've never seen it pump before. Even Jason Casper agrees. By the way, make sure to check out his YouTube channel. He's getting huge.
So look, from all sides, no matter what you're talking about here, it's looking pretty like it's going to be pretty massive here, okay? Let's look at the order flow and see what's happened. We're going to go to the 15-minute time frame on the order flow, and let's see what the market is doing. Okay, so here's the thing, guys. Objectively speaking right now, we do have some bullish divergences forming right here at this low. We have some bullish divergences forming right here at this low. Here's why we have bullish divergences. You can see, I'm actually going to go to a different chart so we can draw on the chart. All right, let's see what we got here. Yeah. Give me one moment. Yeah, we're seeing basically, we are seeing some shorts getting absorbed at these lows here. All right, here's what we got, guys. When we take a look at the order flow here, I'm going to go to coinlines.net real quick. When we take a look at the order flow, you can see that the price is making higher lows, and the CBD is making lower lows, and the open interest is coming up quite a bit here. All right, this is actually telling us that there are a lot of people opening up shorts here. There are a lot of shorts opening up, and the shorts are actually unable right now to push us more to the downside. So this is actually showing us a little bit of bullish absorption happening right before the FOMC. All right, the reason why this is bullish is because there are bigger players right now. We can literally see it happening in real time. The whales, right? Those big fat guys with the hot girlfriends on the winning side of all our losing trades. All right, chilling on their yacht right now with 6 Juanita, right? Your girlfriend that they stole from you. And they're absorbing retail traders who are trying to short this here, and they're building big long orders. Now, we can't just, in my opinion, we can't really trade this before the news, right? But this is absorption happening right here. Something else that is quite interesting is that throughout the entirety of this, we are also have seen very bullish absorption. So, you know, we saw a lot of shorts opening up throughout the entirety of this move. And that ended up with our big pump, our big breakout. Now we're coming back down for the retest. And as we're coming to the retest, we are seeing some bullish CBD forming right here. So it's going to be very, very interesting to see how this plays out in the next 20 minutes. Is this bullish CBD going to hold? Are we going to go for these lows one more time? We're seeing on Market Cipher B the potential of some really bullish divergences forming if we come down here. So I would say this, you know, the fact that we have a lot of shorts maybe opening here, and then we can see bullish absorption happening here, this could actually be the catalyst for a big pump, all right? A big pump to the upside. So as I said before, I am looking to open up a fresh short if we take out the high at 108.4 and then lose that level with bear divs. And I'm also going to be looking for a fresh long trade if we come down to around, I'd say, you know, I would want to come a little bit lower than 102.7. 102.7 is a very key level. We could very well bounce from 102.7, but I'm more interested personally in coming down to the Fibonacci golden pocket zone just below 100K. Just below 100K. This is my more preferred area because I'm already long, so I don't want to open up a freshie. Maybe I would add to a long if we bounce from 102.7. But right now, the two trades I'm looking for that I will open up fresh on stream if I get the opportunity is a short from up here and a long from down here in this box. All right, in this box. 20 minutes until Jerome Powell makes the rate decision. Make sure to smash the likes. Make sure to like the stream. Make sure to subscribe to the channel. You don't want to miss out on this volatility. All right. Shout out to First Coast Crypto. Can you explain what indicator that is? The blue and purple parabolic one? This one down here, this is Market Cipher B. MarketCipherTrading.com is where you can get that. It does cost some money, but I think it's worth it. This guy's walked 5,000 miles talking crypto. How do the uneven boobs form? It's all based on the chart, man. Look, I like to walk on the treadmill, all right? I like to eat. I like to be lean and muscular, so the two go hand in hand, all right? If you want to have ripped abs and also eat 4,000 or 5,000 calories a day, feel great, have lots of energy, get a dang walking desk, all right? Shout out to Yash. He says, awesome trader with the madness of multiverse. I mean, we're out here, man. All right, we are out here. Whoa. Whoa. Oh my goodness, we are transporting through the universe right now. All right, we are transporting through the universe right now. Yeah, we're gonna open up a freshie. That's right. How fresh? Super fresh, baby. Super fresh. Isn't there a bearish div on the daily? Yeah. Yep. Yes, there is. That's why we're looking for that short. All right. That's why we're looking for that short. But we're gonna take it as it comes. We gotta take it level to level. All right. Head and shoulders on Bitcoin. Oh no! Most people sold spot coming down. The market manipulators have to sell what they just bought. It says Drain the Swamp 53. Shout out to Aaron G. Shout out to Crypto Guy 1976. What time will you be on to trigger your trades? I don't know. Whatever time frame I see, man. Whatever time frame I see. Shout out to Crypto V. Shout out to Fifth Emperor. Shout out to Flo Spain, who says, how many coffees do you drink per day? 1 cup every morning. Is that a treadmill pad or a treadmill? I don't know. What's the difference? What's the difference? All right, let's go back to the order flow. We're going to look at the very low time frames here. We are starting to get a little bit of a move down. So we're seeing open interest kind of close out. We're chopping around the VWAP. VWAP is as fair value can get, just so you know. So people are kind of closing out their trades, it seems, before FOMC. A few shorts opening up. But in general, you can see here the open interest coming down. People in general have been closing out their trades before FOMC. We have about 15 minutes until the rate decision is made. All right, so I'm very interested to see what happens. All right, very interested to see what happens. Are we going to get the 25 basis point cut? You know, I didn't even take a poll in the chat to see what you guys think we're going to do. All right. Did I hit likes today? No, I hit upper body today. Yes, JC is outside walking backwards with a backpack and a green screen. That's how we do it. Should you close your trades, Lars? Okay, so that's a decision everybody needs to make on their own, whether or not to close your trades, okay? If you want to keep the money you have in your trades, then yes, close, all right? If you have already made a profit and you just kind of want to see what happens, keep them open. It's literally up to you. You got to make that decision, my man. I'm keeping my trades open because I'm shooting for more profit here, and I'm going to see what happens, all right? Plus, I'm here for you guys, all right? You guys are either going to see me get rich or get liquidated trying. Well, not really liquidated because I do wear my adult diapers. Maximum absorbency is not going to let me get liquidated. I have 26 extra large. Very dependable. Very, very dependable. All right, this guy's shorting right now. Crispy TV would buy the dip. Would buy the dip. We all know it's going to dump, Jay. No poll needed. Well, since everyone knows it's going to dump. All right, since everybody knows it's going to dump. let's go ahead and let's take a new poll up in here. All right, since everybody knows it's gonna dump, we're gonna take a poll. Pump or dump? Pump or dump? Let's take a poll. Pump or dump after today? Let's take that poll. All right, looks like a lot of people think we're gonna pump. Let's see what we got here. Most people think pump, all right? 64% pump, 36% dump. All right, so that's pretty, we're more bullish than bearish, baby. We're more bullish than bearish. All right, so shout out to Mensajero de Dios. Thank you so much for the super chat. Shout out to Ulg Beck M. Jason, can you check flow? We could check flow real quick. Shout out to Cali Crypto Dude. What percent do I set on my stop loss? That depends on the analysis, my friend. It depends. It depends. All right. The way you set your stop loss needs to be determined by the invalidation for your trading idea. Your position size depends on where your stop loss goes. All right. You can't know what percent your stop loss is going to be until you know your position size. You can't know your position size until you know your stop loss. All right, so if this is stuff you don't understand, major shout out to Aaron G, bro. Thank you so much for your super chat. I really appreciate that. If you don't know, we're going to be doing a free trading course in January, so stick around to learn all that stuff. Or if you join the Casper Crew VIP Discord, where we give the setups in advance, like this one, trade them in right now. All right, where we have multiple instructors doing live streams every single day at jasoncaspertrading.com. We have a complete beginner's course in there that goes over all that stuff. All right. Also, guys, BLOFIN, 10% cash back. Link in the pinned comment. MEXC, best deal on fees. Link in the pinned comment. Also, Weeks. If you don't want a KYC, Weeks I've been trading on that has very low fees. Links in the description. All right. If you want to trade Bitcoin, altcoins, and all that kind of stuff. Only if you know how to trade. If you don't know how to trade, then don't do it. All right, don't do it. Shout out to Crypto Coons. We deserve a pump. Well, you know, I'll be honest with you guys. I feel like we deserve a dump. All right, I don't want it to dump, but I feel like we deserve a dump. Like, I'll just be honest with you. I was looking at ETH this morning, thinking to myself, like, you know, hang on, let me just make sure. Yeah, okay. Yeah, I was looking at ETH this morning thinking to myself that everybody, no offense to anyone who bought ETH after Trump won the election, but everybody who bought after Trump wins the election, they kind of deserve to get wrecked, all right? If you're only bullish on crypto because of an election, you kind of deserve to get wrecked, all right? Just throwing it out there. I know it's politically incorrect to say, but look, if you haven't been bullish on these assets throughout the bear market, welcome to crypto, all right? We are trading this disgusting looking ascending channel here on ETH. Absolutely disgusting looking. Looking like we need to just take a whole bunch of liquidity from down below. And you know, it's just so interesting because the Fibonacci golden pocket from low to high is right at the backtest of 3,000, which would basically wreck all these people who bought the top after the election, right? We're talking basically the week after the election, everyone bought. And we're in this ugly channel. So I want to pump. Don't get me wrong. Like I said, I'm very long. I've got $400,000, guys, on longs right now. All right. So it's not like I'm saying this hoping for it to drop. But when I think objectively outside of my own wants and desires and hopes and hopiums, I think to myself, you know, everyone had the bullish news that they traded. Everyone's like, this is bullish news. Trump won the election. Let's all buy crypto now. And now we're apparently going to get more bullish news, which is a rate cut. I don't know. I feel like I feel like a lot of people deserve that dump, man. All right, welcome to crypto. But, you know, ETH, I have to say this. ETH is in a very, very critical area because we are looking at this massive, I like that word massive. I learned that from Trump and Biden. We are at this very massive breakout of this triangle, right? This symmetrical triangle. And if we do break out of this symmetrical triangle, which I believe we will, I know we're going to, we're probably going to hit an $8,500 ETH, at least potentially up to $10,000. So we're looking at another, potentially up to another 160%, 125 to 160% on ETH, right? So it's going to be huge when it does break out. ETH is at a very critical level right now. We go down to the daily time frame, and here's the deal with ETH. If we can hold above the key level of 3,812, which so far we are, right? We've been talking about this literally now since November, that as long as we hold above this level, boom, we're going to pump. If we are now going to lose this level here, all right, then I would expect we get a brutal back test. All right, I actually would expect we get a brutal back test. So far, so good. So far, so good. Don't get me wrong. So far, still bullish. All right, but it's an if-then scenario. As long as we hold above this level now, 3,812, we're good to go. As soon as we start closing daily candles below this level now, we're coming down. Why? Why do I say that? Because we have already attempted the back test, right? We've already attempted the breakout in the back test. So basically, what I mean by that is we removed some of this stuff just for clarity here. All right. This key level of 3,812, we've already broken out. We've gotten the back test, and now we've gotten the reclaim. So the opportunity right now for the long trade has been triggered. It's been triggered. This is the long right now, shooting up to the $5,500 level. This is the opportunity right now. If we fail to get that move, we're probably going to come back down and clear the liquidity and come back down to the next support resistance slip around that $3,000 level, right? This is very make it or break it right now for ETH, as we are 9 minutes away from good old Jerome Powell, the man of the hour, giving his rate decision. 7 minutes and 54 seconds, guys. 7 minutes and 54. Here we go. The countdown is here, baby. The countdown is here. I'm so excited. I can't even contain my excitement anymore. All right, let's see what's going to happen to Bitcoin on these low time frames. We're on the 1 minute chart here. We're going to be watching the 1 minute chart. We're going to be looking at the dollar. All right, we got 3,200 people in the house. Smash up the likes, guys. What time is the decision, Code Magic? It's literally in 8 minutes, okay? It's literally in 8 minutes. It's in 8 minutes. All right, we got some other super chats in the house that we got to shout out. Yeah, 2 p.m. Eastern time, New York time. Yo, 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 shout out to Dale Visions. Shout out to Clean Benz. ETH is not dead. Who said ETH is dead? People in here think ETH is dead. Jump in Jan. You think we're going to pump in Jan? Powell's about to send it. I think Trump's bullish.
Then Jerome Powell, let me tell you, folks, this guy is about to come out of the closet, and he's going to make it pump like you've never seen it pump before. Even Jason Casper agrees. By the way, make sure to check out his YouTube channel. He's getting huge.
Yeah, I think Trump's bullish. Shout out to AZTV. You're short from 107.8. Yeah, that's a good short, honestly. That's a good short. We have no stop loss. It should just stop dumping, says Dara. You think this is dumping? Man, if you think this is dumping, I feel sorry for you. No offense. It's the final countdown. Ta-ta-ta-ta. Ta-ta-ta-ta-ta. Nice. That's a good song. I wish we could play it without copyright strikes. Cue up the freestyle raps. I mean, we're so close. Wow, we have 3,500 people in the house. That's amazing. We could easily get 2,000 likes. We could get 2,000 likes easily. We are going to do a $1,000 giveaway at the end of this stream. What do I think about Dog? We looked at Dog yesterday, Marcos. Thank you so much for the super chat. You know, we took a look at it yesterday. I would recommend go back and watch the stream, but we will be looking at altcoins after the FOMC, in between the rate announcement and the press conference. All right. Yeah, we're doing a giveaway today, so make sure to be in the stream, all right? Because if you leave the stream, you won't be eligible for the giveaway. Tell me how you make this video. What do you mean? How did I get myself at being a deepfake AI? First, we've been done, then we're going to pump. All right, all right, all right. All right, all right. Jerome Powell coming out. Jerome Powell coming out. All right? It's going to be juicy. It's going to be juicy. It is going to be juicy. Where's the stop loss? There is no stop loss. Major shout out to my man James. Thank you so much for the super chat. Here we go, guys. 5 minutes until Jerome Powell comes out. Makes me sweaty thinking about it. Makes me so sweaty thinking about it that I need a towel to wipe off all my sweat. You know? Makes me nervous. Makes me sweaty. So sweaty. I think about Powell. Don't you know your boy needs a towel? I said, I'm so sweaty just thinking about Powell. Don't you know your new boy needs a towel? So sweaty thinking about Powell. Don't you know that your boy needs a towel? I said, I'm so sweaty just thinking about Powell. Oh yeah, don't you know, don't you know? Here we go today, it's FOMC, rate cut decision, what's it gonna be? We check out our man with the press conference, JP. Then we're coming back to the charts of JC. That's right, Jay Casper traded in the house, and we're chilling over here on the Bitcoin bounce. To support, no, we gotta take a peek. Does market Cipher we have any uneven butt cheeks? Big on the left side, nice and juicy. Skinny on the right side just to round out the booty. And I don't even know if y'all could spot it, but we're about to get a bounce straight from the golden pocket. Pull the fib from the low to the high. Check me out, girl, you are looking so fine. I wanna take you home and I wanna make it mine. We could go to Olive Garden, we could have a glass of wine, don't you see? 1027, right over here. Sit back, relax, let me spit it in your ear. We could come down, then we have a nice cheer, cause we get a bullish divergence, then we're in the clear for the bounce. You know, if we break resistance, Bitcoin's gonna pump and then we go the distance. And you know it's getting cold in her. Jerome Powell coming out, money print to go. Yeah, Jerome Powell in the house, looking shady like a little Mickey Mouse. Don't you know he ain't no Klaus, but he sits on the couch acting like a slouch because he comes out the press conference asking questions. Bitcoin price about to change direction. Hopefully we don't dump inverse erection. Back down, mad reflection, introspection. We gotta think inside our heart when the Bitcoin price is dumping. Hopefully we don't fart. Yeah, we got the gas in our belly as we're spreading it on bread like Smucker's grape jelly. Candles turning purple, then they turning blue as the Bitcoin price about to show you what she gonna do. Acting like a wild animal up in the zoo. Next thing you know, she looks like the goo in the water and the water that we drink as we're coming to the kitchen with a nice kitchen sink. Then we drop the spoon in, ka-plink, ka-chink, chink, like the prophets take it out, ka-ching, the change, making the range the way we plunge. Yeah, Jay Casper, he ain't no stranger to the way the price moves, going up and down, and then we crash, then we pump. Can you even hear the sound? I gotta turn around to look who I see. Oh snap, I think it's Mr. Jerome Powell, JP. He says, Jay, how you doing today? I said, yo, JP, I'm feeling kinda gay, and I mean it in the old English way. It means happy or joyful, or if that's what they say, I don't know. I was born in 1999, and the Bitcoin price is pumping and it's looking so fine. Yo, Jay, you were born in 1999? No way, you're looking so old, kinda lying. Well, it's cause trading crypto ages you. That's what it happens when the candles turn to blue or purple. You're losing your profits in the head. Bitcoin price is green, then it's going to the red. Hopefully our long trades don't end up dead. Jason Gasper crazy, got the bars in his head. In the shed, we got the lawnmower pumping. Cutting the grass, you know we ain't slumping. Out in the yard work, chilling in the garden. Bitcoin price, you know she got me farting. Yeah, got the gas coming out behind. The Bitcoin price bouncing right from the trend line. Golden pocket down below, she looking so fine. Next thing you know, price gonna be flying to the upside. Yeah, to the upside. Yeah. I thought the beat was gonna be over, but you know what? It's still going, baby. It's still going, baby. It's still going. Yeah. Yeah, still going. Jay Casper, he still be flowing. I said, Yeah, the beat keeps going. Don't you know Jason Casper, he just keeps going. Oh yeah, beat keeps going. Jay Casper, he just keeps flowing. I said, yeah, beat keeps going. Don't you know Jay Casper keeps flowing? Oh yeah. All right, there we go. Okay, in 1 minute, guys, Jerome Powell. In 1 minute, we got 6 seconds. 6 seconds. All right, get ready for the refresh. Get ready for the volatility. Pending. Pending. Whoa, where are we? Pending. Uh-oh. Let's check out our charts. We are pumping, baby. All right, looks like we're pumping. We're going to go to the 5-second time frame right now. We got a little bit of a 5-second pump. Look at these candles. Here we go, baby. Gapping up on the 5-second. Here we go. Here we go. What happened? Come on. Up. Stayed the same. Oh, no, that's bearish. Oh, my goodness. Oh, my goodness. I can't believe it. Rates are the same. Can you believe it? Oh, my goodness. I can't believe this. Rates are the same. Oh, my goodness. I can't believe this. Rates are the same. That's so bearish. This is so bearish. Oh, no. This isn't what we wanted. Oh, no. Oh, no. Hey, Jay Casper. It's not what we wanted. We're walking around here like the house is haunted. We heard something behind us, we turn around. See the sound, Bitcoin price right into the ground. Jerome Powell, he comes out the closet sweating. The Bitcoin price, all the bulls are betting to the upside. Interest rates stay the same. So dang bearish, now we don't make some change. We got a purple candle coming right down. The Bitcoin price smashing right into the ground. The 1 minute time frame, can you hear the sound? Can you even turn around? Oh my goodness, look at the 1 minute candle coming down. The Bitcoin price about to fall right down into the ground. If you turn around, then you hear the sound of the crowd looking like a king that doesn't have a crown, because we're coming down to demand supply zone on the 1 minute chart. Hopefully we come home. If we hold here, listen to me, my dear, then we pump up, then we could be in the clear. But it's not what we wanted. We thought we were gonna cut Bitcoin interest rates, they were not enough. They decided just to pause the rates. All the traders are so frustrated. Yeah, for 50%. What's the Bitcoin price about to do next? We'll check out the good old SPX just to see. Oh my goodness, look at this mess. 12-minute time frame. You can see the bulls are kind of in pain. You can see the holes are kind of in chains. You can see the way by they're making with the games. We took the liquidity down below, and then we get a wick, and what do you know? We're coming back up with a nice bounce. Hopefully not a dead cat looking for a mouse. Meow, the mouse of the house. You got the couch, looking all around your friend, he wants to slouch. Looking all the town, your bed, he wants to couch. Looking like he's crouching down to get the mouse. But then you know the wick, it just comes back again. The Bitcoin price hanging with her good friends. We took the liquidity, and then we get the move to the upside like our friend Ben. Don't you know my friend Ben from before? Trading Bitcoin, coming right through the front door. I cannot believe this purple candle. Now we get a blue one. Can you get a handle? We'll go back to the good old Bitcoin price time frame. Got the blue doji, purple candles in pain, and the bears are laughing now. Look at the bulls. They were such big clowns, cause they thought we were gonna go up only. All the bears in the house know it's just straight baloney. You know they're coming all around town with Tony, talking about my good friend eating with the Jonies. The Jonies, the Jonies. Don't you know, like the Jonas brothers, hanging out with musicians better than any other. Yeah, now the purple candle's coming back down. Hopefully we do not even hit the ground. Candles turning blue, and now the candle's turning purple, and the Bitcoin candle's so delirious, got me going in circles. All right, enough of this, enough of this. Okay, so let's be honest here. Let's be honest here. Okay? Let's be honest here. They cut rates. They cut rates? Let's see. Oh, they cut rates, you're right. They cut rates! Yes! So bullish! They're so bullish, they cut rates! Oh, whew! Man, they cut rates. Okay, so look, here's the deal. They cut rates. Here's what we're looking for, guys. They're cut rates. So if we come down into this area, we're looking for a long. All right? We come down to this area, we're looking for a long. Oh, man, that was scary. I legit thought they paused it because I was so zoomed in on the dang chart. But, you know, it's a good reason to believe this is not financial advice, okay? It's not financial advice. All right, so Be honest, you don't read chat. No, I do read the chat, but I was looking at this price volatility. All right. So they cut rates. They cut rates. That's bullish. All right. This is bullish. This is super bullish. Actually, it's the same as it was before. Here's the deal. Same as it was before. If we get a dip down into this area, I think that's actually pretty good for a potential long trade. All right. I'm surprised we don't have a lot of volatility right now. Let's check out the dollar again. Wow. This is pretty interesting, man. Very interesting. I think this is bullish for crypto and bearish for the dollar. I think we're going to get a look at this crazy dollar pump and look at this crazy stock market dump, guys. And Bitcoin's just chilling. And Bitcoin is just chilling. Bitcoin is just chilling. I mean, we got a little bit of a pump and dump, but it's nothing like the SPX. I mean, it's nothing like the ES, and it's nothing like the dollar. So let's watch and wait, so that we might be able to open up a freshie. And let me refresh this actually, because it looks like my exchange is frozen here. Let's go down to our 5 minute. Okay, there we go. Okay, so here's the deal. If we come down a little bit lower here to this 102,700 golden pocket, market Cipher right now, the way she's looking, I think we could get a bullish div, and maybe we could start to pump once the press conference begins. All right, once the press conference begins. But let's zoom out here. Let's put back on our key levels. All right. Let's see. Local support. Yeah, local support. All right. This is the local trade right here, guys. Coming down to around this area. This is where I would be looking to open up a freshie, maybe. But more so, I would love to get a move down to this box here. All right. If we get a move down to this box here, that'd be absolutely amazing. Now, someone did mention the fact that we do have a potential head and shoulder right here. Let's see. Potential head and shoulder. Let's see where that would potentially take us. Right into our box, all right? So I'm more interested in head and shoulder playing out. Given the bullish rate cut, I would love to see something like this. I would love to see something like that. I would love to see a big old dump and then a bounce from that area. But we also have to be aware of just the fake out of the head and shoulders. The white line, 1027 is our Fibonacci golden pocket pull from the low to the high. Okay, so our two main areas to be looking right now is for price to come down to here for a bounce, or more importantly, coming down, just dipping around that, just under 100K, all right? Just under 100K. All right, shout out to everybody in the chat. Man, you guys sticking with me, man. You guys are awesome. All right, there's no stop loss. Shout out to Surge Flux. The Surge Flux indicator is live. Thanks for showing your indicator. I appreciate you, man. Guys, go check out the Surge Flux indicator, all right? This guy put a lot of work into it. Hopefully it's not a scam. All right, there's a lot of scammers out there, so be real careful, but the Surge Flux indicator, man. Shout out to Surge Flux indicator. Shout out to Surge Flux indicator. You could clip this, all right? Shout out to Surge Flux indicator. What a great indicator, man. Now you could clip that and put it on your dang website. Jason Casper loves the Surge Flux indicator. Shout out to It's Crypto Now. Been down with your movement since 2020, bro. 100% love and respect. TA on VeChain would be dope. All right, let's check out. We need some alerts here. All right, I'm gonna set an alert here on Bitcoin because we're gonna be trying to take some trades. Honestly, I'm gonna be flopping into some new trades. All right, I'm gonna be flopping into some new trades. Yeah, all right, let's check out some of these altcoins that people wanted here. But if Bitcoin starts moving, we're going to have to take a break, all right? VeChain, USDT. Thank you so much for the super chat, my man. All right, VeChain, I think we've looked at this in the past, but basically this would be my overall plan for VeChain. Here's why I think this is a good plan for VeChain. We made ourselves a nice bottom right here. All right, bullish divergences on market Cipher B. As we come into this low, money flow and momentum getting higher. As we make the low, then we have a change of market structure. That's a sign of strength. Then we bounce from the high volume nodes / golden pocket 786, another sign of strength. So now we pull the fib from the low to the high. And basically, we are looking to come down to the Fibonacci Golden Pocket 786. Basically, the back test of this support resistance flip right around here. And this, in my opinion, is the next place to get into a higher low on VeChain. We're going to say around the 33-cent zone. All right, around the 33-cent zone. All right, Bitcoin getting a move down. Let's check out the order flow. Wow. Okay, so basically just a massive decrease of open interest here. Shorts are opening up. All right, so the reason we're getting moved down is literally because shorts are opening, which gives me actually a little bit of hope for a bounce coming down to our zone. All right, so let's see what happens. We got a little bit of time, about 20 minutes until Jerome Powell, does his thing. So let's see here. Yeah, here we go. Here we go, baby. All right, we're looking for Bitcoin to dip down, take out those lows. Let's check out good old market Cipher B on Bitcoin. Oh my goodness. Okay, so market Cipher B actually looks pretty good here. It does look pretty good here. I have to be honest with you. We are seeing bullish divs on the 6-minute forming here. The 12-minute looks pretty good. Money flow looks pretty good on the 12-minute. So let's see what happens here. We might have to wait until the press conference actually starts. All right. Do we have that? Is there anything? All right, just music. All right, just music for now. All right, we're getting that move to the downside. Let's keep our eyes on the good old dollar and the S&P. So the dollar right now, wow, it's absolutely pumping like a wild lady in distress. Look at that pump on the dollar, man. Just within the last few minutes, we've seen the dollar come up about 0.75%. Let's check out the S&P 500. Oof. Okay, so the ES guys coming back down into this squeeze here. So, man, we are at some pretty key levels, man. We are at some pretty key levels for all these assets. Make it or break it zones for all these assets, guys. Make it or break it zones for all these assets. I was hoping, to be honest, I was hoping for a dump leading into FOMC so that we could get the dump and pump, right? That's what I was hoping for yesterday. So let's see what happens here. Let's see what happens here. We got a blood diamond on the 1 hour. Oh my goodness. I hope you're right, First Coast Crypto. Risk assets negative with DXY soaring. Dump it. Yeah, that is crazy, but let's wait until the press conference, all right? They said less cuts in the future. Oh, is that why? Okay, so we're gonna hear what Jerome Powell has to say. There's a lot of longs they might hold here. Okay, let's check it out. Well, I can't check it out. I don't have heat map. I just have order flow. Shout out to Bitcoin Mowgli. He says, rap on this 90s freestyle boom beat, maniac. Let me check it out. Let me check it out.
Riot's beats, make it funky, funky, funky.
Yeah. I can feel it. Yeah, I can feel it. Yo, check it out, Jay Casper, I can feel it. Sit back, relax, listen to me spit. here we go, as we're waiting for JP. The Bitcoin price, man, what's she gonna be? We gonna pump, we gonna dump. I don't even know we gonna fly, we in the slump. I don't even think we could do it till we dump like Donald Trump. Straight up, looking like we wanna hump. Don't you know it's hump day, and they call it Wednesday. The Bitcoin price about to do it anyway. We do it the same way every other day. I give it to you straight, I never give it to you gay. And we're outside so hungry that we're eating from a tray. We come to the charts, you know we don't play. We're taking trades every single day. You know we're making change, you know we come to play. You know we got a plan out for the next trade. Taking profits with the clip, and we do it like the way we like to fly when the candle's turning green and red. The Bitcoin price, I got the bars in my head. Here we come back to the order flow chart. Got the blue and purple candles looking like a work of art. The candles turning blue and then they turning purple. Don't you know Jason's such a nerd, they call him Steve Urkel. And the price action got me in circles. It got me so dang delusional. Delusional, another word for delusion. Bitcoin candles, we only want them blue and we want to see them go up. We got the short strap, don't you know we're gonna pump. We're in the long trade and you know we're not slump. Cause we're looking for the next profit in the comp. Don't you know 110k, 112, the Bitcoin price hopefully don't dump to hell. We only want to see it pump, going to heaven. Next thing you know we're at 107, 108. The Bitcoin price going through the gate like the next GP. And the 618, then the 786. You know she gotta wait, hopefully we're early. Hopefully we're not late. Then we pop over to Carl from the moon. Drove me in his car, then we start to zoom. Got the chicken in command when we're sitting in the curfew. Next thing you know the price about the perfume. And I gotta give a shout to my dude Michelle Obama, I don't mean to be rude. Also gotta give out to shout out to jalapenos. Spicy peppers, don't you even know? Check it out, I'm trading and driving. Don't do this if you wanna stay alive. Cause don't you know if you're feeling the jive, you got the cops trying to pull you over from behind. Officer, I didn't mean to speed, but you know I have a very special need. I'm trying to trade and drive so I can make the green. Officer, if you know what I mean. He said, Jason, I gotta pull you over. Get out the car. Walk here so slow, yeah, I said I can't walk straight. Cause I'm drunk on the candles. The Bitcoin price can't even get a handle. Gotta refresh the chart like a nice work of art. Got the purple candles coming down. She got a fart, she got a dump. Looking like the rump. From behind, you know that we're in the slump. Coming to the yellow line, from the low to the high. Hey girl, look at you, man, you're looking so fine. I wanna take you out, have a glass of wine. Go to Olive Garden and I wanna make you mine. Don't you know at Olive Garden we can eat the pasta? Don't you know Jack Casper is a Rasta? Like Jamaican man coming out with the dreadlocks. The Bitcoin price, hopefully we don't drop, yeah. Yeah, then we're coming back down. Driving through the town, then we gotta turn around. Smiling only, but then they turn to frowns. Cause Jay Casper on the treadmill, what a clown. Yeah, if the price is going under, make sure to take out your plunger. Give it a lick, lickety split. Gotta have a little taste, nice and quick. Don't you know, it tastes kinda nice. It doesn't taste too bad cause I only used it twice. What do I eat for dinner? Only rice. I don't eat quinoa, I don't think it's nice. But yeah, then we're out here in the kitchen making all the good food. So good, finger licking. Don't you know we're playing soccer ball, we gotta kick it. Next thing you know we gotta listen. Jay Powell about to come out in 13 minutes. Hopefully, he only eats his spinach. Coming out the clock with the press conference. The Bitcoin price about to make the difference. Then we're coming back to the chart. SPX thumping down like the fart. Check out the dollar, are we going up far? Oh my goodness, look at the pump. We got the scars from the punch in the face. Bear such a disgrace on the dollar. We're pumping out all over the place. But SPX coming back down. Don't you know the bulls, man, smiles to frowns. Coming to the trend line. Okay. That was a nice beat. Thank you, Bitcoin Mowgli. Thank you, Bitcoin Mowgli. All right. Thank you. I appreciate you, man, for the beat. All right. They cut the rates. They cut the rates. They cut the rates. We got some super chats in the house. I appreciate that, Bitcoin Mowgli. All right. We're getting ready for the press conference. All right. Shout out to the Global Sacrifice. Appreciate the super chat. Thank you so much. Man, ES is dumping like crazy, guys. Let's do a little analysis on this. We'll pull that local golden pocket. Oh man. I don't want to lose that trend line. I don't want to lose that trend line. Alright, let's pause that. I'm going to get hit with a copyright strike. Alright, we'll put back on some nice beats here. So look, I don't know what's going to happen here. I have a feeling we got to watch the stock market as well. Let's wait and see what he says. If he comes out very hawkish, I would honestly rather wait for a breakdown of this head and shoulders. If he's hawkish, we want to wait for the breakdown of the head and shoulders. All right. This right here could take us down to our target at around, just below $100,000. I'm gonna pull my fib from low to high. We're basically looking for a back test of this area between the golden pocket and the 786. All right, so we could see the breakdown of the head and shoulders into this area and then get our pump. If that happens, I am going to be adding to this long trade here, guys. All right, we'll add to the long trade right here. Okay, all right. So 10 minutes. Why dump? Apparently, somebody said he said they're going to slow down rate cuts. Okay, so that could be why. But look, if we do dump, right, this is going to be an opportunity for us. All right, if we do get a pullback now, okay, this is going to be an opportunity for us to buy. Because look, like we said, $97-ish thousand is very, very key support right now, right? If we lose it, that does open up the door to 84K. We don't hold 84K, that does open up the door to the low 70s. Low 70s, and look, I'm not saying that's going to happen, don't hear me wrong. But we've been talking about literally since the big breakout that a back test of the low 70s, if it happens, is going to be the last opportunity of the bull market. If it happens. If it doesn't happen, then we don't get that good opportunity, right? Comic Lover says, should pump once people realize higher rates are good for Bitcoin. The question is how long it takes. Well, look, either way, Bitcoin is going to pump. All right, either way, Bitcoin is going to pump. Either way, Bitcoin's going to pump in the long term. So, yeah, discount pricing, exactly. Exactly, discount pricing. We're bouncing from 96. That's what I hope, right? That's what I hope. That's where I'm looking to add to this long trade that I'm in right now. All right? I'm looking to add to it. Or maybe open up a freshie. We'll have to see how it goes, all right? But we want to see how he kind of sounds. You know, is he dovish or is he hawkish, right? There's a CME gap at 76. Yeah, yep, 77.5. You hope it doesn't happen? Look, okay, here's a problem. Ultra Chat says there's absolutely no way we go back 70. I don't know if you're trolling, but the very fact that you said this, my man, the very fact that you said this means it's probably going to happen now. Because of what you said, man, all right? It's your fault, Ultra Chad, if we dump back down to that level, because you said it couldn't happen. Bitcoin loves to test people's patience, all right? And Bitcoin's up for challenges. You tell Bitcoin you can't do it, then Bitcoin will do it, all right? I mean, when we look at this, right, guys? All right, let's be honest. Let's just do some basic TA. We have the 96K trend line right around here, all right? This trend line, this is our support where we're looking for our first potential bounce. If we lose that, then the only other support we have is going to be the $84,000 level. We lose that. Tell me, what support is in between 84 and 70? What support? Can you show me what level? What support is here? Show me the support. Oh, there is no support? You're right, there's no support. The only support we potentially have is on the lower time frames, right around this area where we do have the CME gap, right around this zone, right? So if we lose 84K, it will be a smooth ride down to 76. If 76 doesn't hold, I wouldn't be surprised if we get a wick down to the low 70s, honestly. We might get a wick down, you know, the wick might happen, and the wick might dip into this. I'm not saying this is going to happen, all right? We're taking it level by level. But part of taking it level by level is saying, first we have to hold the trend line. I'm hoping we hold the trend line, All right, this trend line right here, this is where I'm looking to add to the long trade. All right, this is the trend line, this lower trend line. We're looking to add to the long. Keep in mind, guys, I literally have $400,000 long right now on Bitcoin. So when I say this, you have to understand that would take me out of these trades. All right, I don't want this to happen, but I have to prepare for it. All right, so when I'm long from 70K, and you guys are like, how did you long the exact bottom, Jason? How? I'll say it's because I was planning for it, right? Yeah, shout out to Chad, man. Ruin it for everybody. Dang it, Ultra Chad. Dang it, Ultra Chad. Christmas capitulation. That would be crazy. Exactly. You got to have the plans. You got to have your plans planned out. All right, like this long trade right here. Planned out, baby. Planned out in advance. Setup given in the Casper crew. All these longs we've been taking for the past few months. A lot of them I took live on these streams. It was all because we had them planned out. It was all because we had them planned out. You know? All right, this is crazy. I have 7 notifications. I don't know. I don't know if she's European, J-Boy Bullish. I have no idea, man. If you're even in the chat. If you're even in the stream. Aww. Aww. That's so cute. That's such a cute picture I just saw on this cellular device. All right, here we go. 4 minutes until Jerome Powell. 4 minutes until Jerome Powell. Let's get ready. Let's get ready. Let's refresh. We got bull divs on the 24. Let's see. If we take that low, it will look pretty nice. Oh yeah, would look pretty nice. Shout out to J-Boy Bullish. Yeah, bro, I don't know if she's European, man. I don't know. Like, I literally don't know. That's the funny thing about it. I don't know anything. I'm just trusting what other people told me, you know? I give people the benefit of the doubt. All right, can't wait for this press conference. Yeah, so right now on the 24-minute, we do have potential bull divs if we take the low on the 24-minute. Right? So let's watch and wait. Let's watch and wait and see. Watch and wait and see, baby. What's it gonna be? Come on, Jerome Powell. Shout out to Hungry Raven. Shout out to Hungry Raven. I gotta give a major shout out to Hungry Raven. Shout out to Rod. God bless you, Rod. Shout out to Nick. Show me the chart and I'll tell you the news. What does the chart say? Honestly, the chart looks more bearish than bullish to me. It looks like we could get a bit of a pullback. Lowered your car payment today, so I see this as an absolute win already. Absolutely, right? Shout out to Dusty Hodler. What? Dusty Hodler, what? Shout out to Sunshine Girl. You got your shout out, Sunshine Girl. Shout out to you. Shout out to Sue Deep. Shout out to Sue Deep in the chat. Shout out to Splashfire Films in the chat. In a position, is it possible to add money and change the liquidation price? Yeah, you can add margin for sure. Shout out to the Casper crew. Shout out to Ab Deslam. All right, here we go, baby. Here we go. Here we go. Jerome Powell. This is the Jerome Powell song. Whoa, yeah. Jerome Powell, the man of the hour. Jerome Powell, the man of the hour. Jerome Powell, the man of the hour. Yeah. You know me. a special thing together. Yeah, me and Jerome got a special thing together. Don't you know Jerome's gonna come out of the closet and talk to us? Is he feeling kinda dovish or hoggish? Oh, here we go. Here we go, baby. I'll do the sign language.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. And, you know, the point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but you know, once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, you know, going to be between 2.5 and 3. It's way below where it was, but you know, we really want to see progress on inflation. You know, as I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, you know, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And you know, there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, you know, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and you know, it puts us in position when we finally do see what the actual policies are to make you know, a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Given the recent bout of inflation that we've been through, with consumers seeing how, you know, prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And you know, so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be you know, retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but it would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, you know, we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought, 2 years ago. But it's nonetheless steadily coming down as market rents, start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices, and that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight, but overall you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22. In, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market. And it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has, in recent months, been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, you know, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, well, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
So, you know, we're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and you know that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high, wages are at a healthy and ever more sustainable level, wage growth, and so the labor market. This is a good labor market, and you know we want to keep it that way.
Thanks.
Amira.
Thank you, Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
You know, we can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning big real wage increases, so that their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration? I feel
very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be there are things that affect the economy that are lasting but not permanent, and the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in, and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria.
Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal overall is headline inflation, because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy, and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be, because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm.
Yeah, so headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really nothing has come out of those risks that really has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, and but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't overreact to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. And it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, it's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now, and we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong, though, that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if two years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways, appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. that's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
There you have it, folks. Mr. Jerome Powell, Chairman of the Federal Reserve. The event is now over. Oh, and there's the music gone too. Well, well, well. Well, 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 well. All right, we have to do a $1,000 giveaway. But to be honest with you guys, I am not... So here's the deal. We're at the value area high of the range. We're at the 786. We could bounce from here. The reason is because we have bullish money flow. We have a nice bottom on our 6-minute. We have some bull divs on like the 12. Personally, though, I'm not convinced based on these lower time frames. The money flow on the 1 minute looks awful. And so for that reason, I am not going to open up a fresh long from this 786. I would rather wait for my white box. All right, if we bounce from here without me, I do not care because I'm already long. I'd rather wait for a better entry, right? So I want my box to be hit. That being said, I recognize we could bounce from here. This is support. We're at the value area high of the range, and we're at the 786 fib local. So I have an alert set if we take this low. In the meantime, guys, let's do a giveaway. We're going to give away $1,000. We're going to do a $1,000 giveaway. Let's get some music on up in here. All right, we are going to do a $1,000 giveaway. Here's how we're going to do it. You need to have a USDT address. 1 second, let me lower the music. You need to have a USDT address, all right? You need to have a USDT address. What we're going to do is, I want you guys to spam the chat with your USDT address. All right, spam the chat with your USDT address. And what I'm going to do is, I'm going to take a screenshot as we count down from 10. And whoever's name is highlighted with the screenshot wins, okay? So what I'm going to do is I'm going to pop this on my screen over here. We're going to do our giveaway. Alrighty, alrighty. Alrighty, alrighty, alrighty. Here we go. Alright, so I'm going to count down from 10, and whoever's highlighted on my screen wins, alright? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Alright, our winner is Dows. Alright, shout out to Dows. Dows has just won. Congratulations, Dows. I'm going to copy your address. Gonna text it to myself. And yeah, I'm gonna send you $1,000, man. Congratulations. Congratulations, congratulations, congratulations.
Now let me be clear. I've been dead since 2019, and every time you see me on TV, I'm either a deep fake or a body double. But folks, all scientists agree, Jerome Powell is alive and well, and he's about to make a massive move happen on these charts. So if you don't vote for me, then you ain't black.
Congratulations, Dows. Yeah, so we could bounce from this level. It was definitely a good scalp if you caught it. I personally did not take it. I was waiting for my box, so I kind of hope we come to the box. I hope we come to the box. All right. Just sent $1,000. Congratulations to our winner, Dows. Congratulations, Dows. Absolutely amazing. Wonderful. Glad that you have won. Glad that you're a winner, man. I really am. I really am. All right, so let's see what is going to happen with this Bitcoin price action. We are bouncing from, right now, if we pull the fib from this low to high, we're bouncing from this 786 right here, which is also the value area high. There's a chance that the bottom is in here, but personally for me, I would rather wait for the white box. All right, so that's what's happening right now. This is why we're getting a bounce. We are currently getting a bit of a bounce. What an exhilarating thing, okay? What an exhilarating thing. Let's check out Market Cipher B. All right. Let's check out Market Cipher B. This could be a bounce here, guys. Let's check out good old Market Cipher. Let's check out our 1 minute here. I don't like the 1 minute. Here's why this could be a bottom, really. It's the 6 minute money flow that does it for me. What would be much better is a little bit lower. A little bit lower with a nice uneven butt cheek right there. That would be much nicer. Let's check out the order flow and see how she's looking here. Let's check out the order flow. We'll take a look at some altcoins. Alright, so the order flow. It is giving us a little bit of bullish CVD here. Just a little bit. Just a little bit. Locally. So yeah, maybe it is the bottom, you know? Like I said, I am not going to take a fresh long right now. But we also do have lots of trades opening up here. I mean, we see 100 million volume with an increase of open interest with negative delta. So a lot of people shorted the low. And then we have longs immediately opening up. This actually looks pretty nice. This actually does look pretty nice for a bounce here, guys. I ain't gonna lie. It looks pretty nice for a bounce. But I do want to wait for my box before I open up a new one. All right. If not, I'm just going to hold the longs I've already got. So, shout out to our winner, by the way. Congratulations. We have double music, huh? I hope not. Hope we don't have double music. How's the music, guys? Is it doubled? Sounds good to me on my end. Shout out to Aaron G. God bless you, my bro. Shout out to Dread Mining. Finally bought Sui on the dip. Let's check out some other assets while we are looking at the dump here. Let's check out ETH. So here's the deal, guys. ETH, you know, we potentially do have also a long on ETH here. Or not a long, but ETH is also at support, right? ETH is at the golden pocket. We are at supports. A lot of these assets right now are at supports. Personally, for me, see, we lost this level and we did dump down. Personally, for me, I am not opening up any new longs right at this moment. That's just my own personal decision. But we are at supports. Let's check out some of these lower time frames. ETH, 12-minute money flow looks really nice on ETH, actually. Looks really nice on ETH, I'm not gonna lie. Let's check out the Bitcoin. I would really love to take the low again. I would really love to come to the box. That would be really nice. Really nice. Let's check out Chainlink. Oof. Let's pull the fib. Alright, Chainlink not at fib support. Chainlink kind of chilling in the middle of nowhere. I would like to see Chainlink come down a little bit lower here, honestly. I would like to see a lot of things come down a little bit lower. But we might not get it. But I'm going to wait until tomorrow to take a fresh trade, I think. I'll wait and see how tonight goes. And then tomorrow, we'll be back with some fresh ideas. Alright, Divine Hood says the music is fine. If Bitcoin doesn't pump, what brings the altcoins down? What do you mean? What do you mean, my man? Gotta slow down the treadmill a little bit. Alright, shout out to J-Boy Bosch. He says, buy the dip, baby. I hope we dip a little bit lower. You're looking at 3,444 on ETH. You're talking PNGU, maybe a buy. Shout out to Dread Mining. Let's check out PNGU. Whoa! I mean, wow. Yeah, I would say. That looks really, really great. That's the 12 minute. Let's check out the hour. Even on the 1 hour, man. That looks pretty dang good. We took that liquidity. We took that liquidity, man. I mean, we're a little late to the party, right? How much did we already pump up here? 12%. It looks good on these low time frames. It looks amazing on the 24 minute. It looks so good. That looks so good. Look at this beautiful curve. Let's go to the 6 minute. Money flow in the, yeah, I mean, it looks really good to me. I'm not gonna lie. Looks pretty good. I've never bought Pengola myself. I've never bought it myself. I don't know anything about the fundamentals. That's a rug. I mean, it looks like a rug on the low time frames, but on the high time frames, it looks just like we're just chilling out, you know? All right, let's see if we can coax Bitcoin to come down into the box. Come on, Bitcoin, can we come into the box? Wrong ticker, it's the wrong ticker. Shout out to I Took the Red Pill. What are you looking for? Red Pill is looking at ADA. All right, let's take a look at ADA. Oof. So, ADA coming back down to the bottom of this triangle. I would say for ADA, I would want 80 cent. That's what I'm looking for on ADA is 80 cents. Move to the downside, 80 cents. Right, a back test of our major support resistance flip. That's what I'd be looking for on ADA. If we're gonna lose 80 cents, I would pull my fib from the low to the high. And then I would be looking at my volume right here. And I would say value area high, 786. Let's pull this. Yeah, either the 80 cent support resistance flip or the 50 cent area. Those would be the two places I'd be interested in a bounce on Cardano. All right, come on, Bitcoin. We gonna come down to the box or what? We gonna play around or what? We're gonna play around or what? Play around or what? All right, I think we're coming down, guys. Buy or sell if we hit the box? Definitely not sell. I mean, I'm buying when I hit that box. All right. Do some shopping today, says Abu. Long below 995. Yeah, I mean, really, it's this white box that's where the long must hold. Honestly, that white box must hold. Otherwise, we're coming way down. Huge dump on NASDAQ and QQQ. With what leverage? If you have to ask that question, please don't trade. Rollins, no offense. If you're asking what leverage to use, do not trade. Please do not trade. 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 All right, you don't know what leverage is or how to use it if you have to ask that question, so please don't trade. Go learn. Save yourself a lot of money, my friend. All right, this is tough love. This is tough love. When will I close the short? Well, the short is going to be hit a take profit at that golden pocket. You can see it right on the screen. All right, right here, right at the 618. Right at the 618, baby. At the 618. Yeah, gonna close the short. Now sit back and wait. About to hit a take profit at the 618. I said close the short. Just sit back and wait. About to hit a take profit at the 618. Hey yo, Jay, here we go. Bitcoin dumping down. About to hit the white box right into the ground. Purple candles flying out. Can you hear the sound of the bulls getting wrecked? And the bears around town laughing at the bulls, saying told you so. Punch them in the face, punch them right in the nose. Blood from the face just begins to flow. With the bears laughing hard with the crypto show. Oh yeah, Jay Casper, here we go. Trading in the house. Over here on my laptop sitting on the couch. All my friends coming in say don't slouch. Yo Jay, better get out the house. Like you're looking around, looking to town, looking to sound. Getting CDW around. Got the bull divs at the low. Here we go, maybe we bounce from here. What do you know for show? But we hit the value area high. Now the Bitcoin price might start to fly, but you know I'm hoping that we come back into the box. Hopefully we drop 618, golden pocket spot, then we drop. Then we pump it to the top. Next thing you know, we go, we don't stop. Always trading cause you know we're at the top. Once you're at the top, then you know we're gonna drop like a fox. In the box, looking around like Spock, looking like he wants the box to fight in the face. You got punched, better wait. Coming back around, hopefully you take the train, going back to your house. Don't you know Bitcoin wants to bounce, but we're coming to the box. Got the trend line also. We could draw it from the low to the high mouth. So don't you know, about to take the trend line, drag it across. It's looking so fine, but MEXC's lagging. Looks like we're sagging. Hopefully you're straight and you're not a faggot, but can't say that word on the YouTube. About to get banned just between me and you. It's against the community guideline rules, so I take it back. Jay Casper, what a fool, but when you're rapping, sometimes you gotta say the word that rhymes. You don't have time to think of something else, you're not sly. You gotta think of words real quick on the fly, but we're coming right down to the nice yellow line. What else rhymes with lagging? I don't even know, maybe Bilbo Baggins. As we're dropping back down to the saggins, like we got a double chin and we're ragging like we're nagging, like your wife in the house, in the kitchen, asking you to make dinner, but you're too busy finger licking cause you ate the brownies and you're looking like you're sticking. Got the honey from the beehive tricking you out, flipping you out, tricking you down. Then you go outside pouting cause you we're so dang bullish at the top, then we drop, then we're coming down. Don't you know the Bitcoin at the spot? Here we go, bouncing, then we sagging to the line, looking fine, and we're ragging. About to take you out, drink some wine for ragging. Out to eat some pasta, then we go and stagging. Cause we're stagnating here in the water. Mosquito larva looking like a father, and your mother looking like your brother. So we go out the family reunion other. Then we eat the chicken dinner, and you know that it's a winner. And we looking like we're thinner, cause we lost to eating dinner. Only one meal a day keeps the weight away. That's what they say. Listen to Jay, hey yo Jay, what we doing here? Bitcoin dumping down, have no fear. Don't be afraid, listen dear, I don't want you to have any fear. Like we're in the leer, in the queer, looking like a spear, throwing through the fish for rear. Oh yeah, now we're at 1,000, 100,007,784. Like we're rounding the corner just like before. We're coming through the door. My boy got the author like looking out before. Chain up, he says Freestyle King. Now sit back and listen to J. Casper sing. Shout out to Mike Door, earning that more. Anybody out there, we're going through the door. Oh, mad for the win, don't you know? It keeps the body fat away so your belly don't grow. Yeah, about 3,000 up in the house, now we're around it. Coming down to the white box flip. Support resistance, then we start to rip to the all-time high. Bitcoin gonna fly straight up into the sky. Hopefully the longs don't die. Then we're coming back down no matter how hard we try. Don't you know we gotta stay alive, yeah, Man. Shout out to Blue Mars. Man, I hope Tether don't dump, man. Alright? I really hope Tether doesn't dump. Let's see. Let's check it out. Yeah, I think we can come down to hit our white box, man. White box, baby. Box, baby. Look at this, MEXC lagging, man. MEXC lagging right into the box, baby. We hitting that box? We hitting the box? We hitting the box? Come on, MEXC, don't lag on me. We hitting the box? Come on, MEXC. Don't lag on me. Yeah. Come on, MEXC, don't lag on me. Come on, MEXC, what's it gonna be? I said, come on, MEXC, don't lag on me. J. Casper, what's it gonna be? Bitcoin, MEXC, it's lagging on me. As we're waiting for the box, baby, what's it gonna be? I said, MEXC, it's lagging on me. Yeah, here we go. Don't you hate it when you're trading, then the exchange lags? As you're trying to fill your crypto bags. Looking around, old lady hags. Next thing you know, we're looking like we're trags. To try to hit the box today. Next thing you know, the price will play. The market makers coming out, mad manipulation. Then they sit back as Jason Casper spits it. As we're driving all across the nation. And we're feeling just so frustrated because the price is dumping and we wanted to pump at the value area high. Then we start to slump, but here we go. Take a look at the lower time frames. Market Cipher B, hopefully we're not in pain. As we're looking for the butt cheeks, are they coming in? Will they save us on fleek? Maybe not, cause look at the money flow coming down, looking pretty bearish. Can you even hear the sound? But the one thing going for us, if we take a look below, we got the Big Ben Armstrong dots on flow. Big and juicy on the left, skinny on the right. What happens next is called the uneven butt cheek pattern right here. Listen to me spit, listen to me, my dear. We got the left butt cheek full of gravy. Right skinny, so skinny, then maybe. You know they don't squat and you know they don't deadlift. Bitcoin in the ocean, we will drift on the piece of wood and the nice raft. Bitcoin price is dumping so fast. Next thing you know, we're hitting right into the grass. Then we'll get into our car and drive fast. Gotta get away from here. Sit back, relax, listen to me, my dear. This time will be different, I can feel. Just the way the Bitcoin price keeps it so real. But if we hit the box, don't you know we want to see the divergences on spot so we could get long and ride it to the top. Take the profit and it really hits the spot. Cause you know I want to make $100,000 on this one trade. Now let me holler back at you, girl, as we come to the pocket. Then we bounce. Can you even spot it? Got the candles turning purple, they turning blue. The Bitcoin price about to show you what she gonna do. Acting so wild like the animals in zoos. Next thing you know, my purple shirt will turn blue. Then the candles turning blue, they turning purple. The Bitcoin price got me running in circles. I'm drinking all the slushies and you know I love to slurp, yo. Next thing you know, I really gotta burp, yo. I got that gas in my belly. The purple candles dropping just like Smucker's grape jelly. Yeah, I like to rub it on my belly. Like the nice Teletubbies and the Scrubbies. You see a bullish divergence occurring. Yep, me too. This is a bullish divergence on the 3-minute. It's a bullish divergence on the 1-minute. And actually, is this serious? No. So yeah, we're at another support. We're at the value area high. See, we took out that low. Yeah, this could be a bull div here. I don't like the money flow though. I really wish we had nicer money flow. The 5-second actually looks pretty good. The 1-minute could be more bullish. I really want to hit our box, man. I really do want to hit the box. But look, I trade like a spoiled brat. You know what I'm saying? I got to trade like a spoiled brat. I really want to wait for my box. If I don't hit my box, I'm not going to open up a freshie. All right? Is the white box at 99.5? Yes. Yep. That's the white box. 99.5. 99.5. 12-minute money flow looks great. I would just love a little bit more confirmation, man. Just love a little bit more. Let's see what happened on the order flow here. Shout out to Vitality, the whole market in a sea of red. Tima is going parabolic again. Interesting. All right. Ooh, USDT dominance hit the golden pocket. That means a dump, right? My crypto goods. All right. Yeah, this could be a nice bounce here. Like I said, I would really want to wait for my box. I gotta be honest, but this is nonetheless, this is a support. This is a support right here, and we do have bull divs. This is a support, and we do have bull divs. Let's go to our 1-minute here. Man, I really do want to come a tad bit lower, but this is a nice level here. Man, it's too late for me. It's too late for me. It's too late for me. This could be a nice one. I'd rather wait for a little bit lower. I'd rather wait for one more drop here. Rap is the lowest form of art. Is that true? Would I long gala? Thank you for the super chat. Let's check it out. Would I long gala? You take a look at Tima. Would I long gala? I mean, I would prefer to wait for the box, man. I'll be honest with you. You know, maybe I'm just too, maybe I ask for too much with these coins. You know, maybe I just ask for too much. Maybe I just ask for too much. All right, shout out to Dovis Vi, H-Bar. Check out H-Bar. Thank you so much for the super chat. I mean, H-Bar just chilling out. Man, Bitcoin, I hope we don't pump without me, man. Come on, Bitcoin. Wow. Look at that. H-Bar. So H-Bar is forming this bull pennant here. I don't really know what to say about it. It hasn't done much. The only thing I could really say is, if I was looking for an entry, I would love to hit that golden pocket. But let's zoom in here. Let's go to like the 24-minute. It really hasn't done much, my man. Shout out to Rich and HH. Thank you for the super chat. Shout out to Vitality. Shout out to Alex. Shout out to Ash. Can we look at TEMA? Yeah, let's look at TEMA. Hang on. Didn't we look at this the other day? And didn't we decide that... Whoa! That we didn't have any data to go with, and now it's pumping like crazy. So look, there's no data to go with here. I appreciate the super chat, but what do you want me to say? What could I possibly say about this based on the chart? There's nothing to say. There's no data on market Cipher. We have no market structure. You know, if you're bullish on it, what can I say? Then buy it. I don't know what else to say. I'm a technical trader. Dang it, Bitcoin bouncing before the box. Well, I can't be surprised. We did hit that value area high. But, man, I would have loved to come just a little bit lower there. Shout out to Not Mad. He says, yo, Jason, much love. Could you share your views on Ondo? I think we looked at Ondo this morning. So, this is my view on Ondo. Just based on everything here, right? Bullish divergences, a nice low, a change of market structure, a bounce from the fib, a macro change of market structure. So now we would want to pull our fib from that last low to high, and we would honestly look for a buy in the back test coming in at the Fibonacci golden pocket around $1.12-ish. That's what I would want to see on Ondo. You know, that's the next place I see like a nice opportunity to get in on Ondo. On Ondo. On Ondo. On Ondo. On Ondo. On Ondo. Anando. That's interesting. A lot of longs just closed out here. That's interesting. Alright, I'm sorry, Dread Mining. What did I do the wrong ticker? I did the wrong ticker. Alright, my bad, Dread Mining. I'm sorry. I'm a little bit out of it, man. I've technically been streaming for 5 hours today, so believe it or not, it does take a little bit out of you. There we go. Sorry about that, Dread Mining. I apologize, my man. Here we go. Okay. All right, so let's go to the daily. I just want to set an alert, a little alert here on Bitcoin, actually. So the daily looks really good. I'm sorry, this is not the daily, it's the 5-minute. Actually, the daily does look good. We got some bull divs on the daily. We got some bull div on the 4-hour. Let's go to the... Alright, so this low looks really nice. We formed a nice low right here with some bull divs, money flow, momentum coming up. Then we're bouncing from the 786. So honestly, put on our 886. If we are going to continue in an uptrend from here, this would have to be the buy zone for me. Where we're at right now, down to the 886. Basically looking for that historic resistance. I'm sorry, historic support. Come down, get a little bounce. That's where I would look for a bounce. All right. All right, so if we are going to bounce, this is the retest right here. And if we don't bounce from here, then we do get to hit our box. If we don't bounce from this zone right here, then we do get to hit our box. Alright, I'm going to take a little long from here, guys. I'm going to see if I can't long a retest. It's a good risk to reward. Alright, and if not, then I'll take a small loss and wait for my box. Looks like it's a fail. Looks like it's an epic fail. Ah, epic. That's okay. $105 to 106 is where the liquidity is. Yeah, it could be nice. Could be nice. I mean, let's see how this thing goes here. If this don't hold, I would expect our box to hit, but I like this. I like this little bottom here, so let's see what happens. Anthony says you guys are going to wish you grabbed Tima. Yeah, I mean, maybe, right? Maybe. I don't know. Like, I don't know the deal. I don't know the deal. I'm not a fundamental guy. You know, I'm not a fundamental guy. Shorts get wrecked at 111K. Let's hope. Let's hope we could pump up to 111K. You know? It's all about Hex and Pulse Chain? Oh man, Hex and Pulse Chain. I don't know. Come on, man. You really think that? You really think that? Sand price as we can see 99.067. Look, we can see our box right here. All right, we can see our box right here. This is support. This is major support. This box is major, major support. If we lose this box, guys, it's over. It's over, basically. It's over for Bitcoin if we lose this trend line, right? I don't mean to be pessimistic, but if we lose the box, if we lose this major trend line, this is major support. This is my real white box, okay? This is my real white box that we're looking for to add to this long trade, all right? To add to this long trade. I want to have like a $500,000 position and ride it up to a new high from this box. That's what I want. That's what I want, baby. But if we do bounce from here, then, you know, I've taken a little long. I've opened up a freshie, a little freshie, all right? It's not looking so great, actually. It's looking pretty bad. Pretty bad. That's okay. What about the daily bear div? Yes. If that thing confirms, which it looks like it will, then the rest of the week is definitely going to be bearish, and we could probably lose this white box. Yeah, it's not looking the best. But look, it's not over until it's over, right? It's not over till it's over. It's not over till it's over, all right? Shout out to Black Swan. He says, you've been struggling. Do I think the times of signs, miracles, and wonders are past? No, of course they're not past, man. Of course they're not past. No, they're not past. How do I think inside the box? How far can it go inside the box? It could come all the way down to the bottom of the box. Potentially down toward the $96,000 zone. Here we go. We're coming down to it now. We're coming down to it now. Let's see. All right, I just got stopped out of that long. Let's see. I'm gonna hit a take profit on the short. At the top of that trend line right here. So let's see if we come down to there. If anyone can keep a log of Abu's chat, he'll never get wrecked. LOL. Hey, maybe, man. Abu, man, he don't play around. Abu don't play. You know what I say. Man, it's been a crazy stream, guys. We did a lot of freestyles. We did a $1,000 giveaway. We dumped like crazy. We listened to Jerome Powell. We did sign language. What treadmill do I have? This is an LSRZS Sport. LSRZ Sport treadmill from Amazon. Very cheap, all right? And worth every penny. Worth every penny. Worth every penny. Yeah, I'm still bullish into next year. I do not think the top is in yet. I do not. I do not think the top is in yet. Do I have one more in me for another freestyle? I don't know, man. I'm pretty brain dead right now, if you guys can't tell. I feel like I'm stumbling over my words. I don't think I can do it. Let's see. Let's just see how it sounds. All right. If I can feel, I'm gonna have to play the beat, and if I feel it in my bones, I'll be able to do it. All right. Let's see if I got a freestyle in my bones, man. Yeah. We dumping, baby. We dumping, baby. We dumping, baby. We dumping, baby. Check it out. Then maybe we could come to the box, and then we talk to ladies as we bounce to the top, and then we getting shady cause we come to the drop, and then we're feeling maybe that we come back down. Jay Casper rapping again, hanging out with all my good crypto friends. Hopefully the beat drops so I can feel it. Listen as Jay Casper spits it, but I can't hear the snare up in my headphones. Jason Casper rapping, his voice is all alone. Yeah, now the beat drops again. Here we go, trading Bitcoin with all my good friends, and we're driving Bugattis and the Mercedes-Benz. Got the Corvette, and you know we're trading trends with the trend line. Bitcoin looking fine, spitting lines as we're going all the time, and we're looking fine. Coming back down pianos, hear her shine. We got arpeggios floating through the lines of the times, of the signs of the times. Got the miracles, the Bible chilling out, and you know we're very spiritual, cause we're going all around as we're looking at the right bears and bulls. Don't you know they always in fights? Here we go, got the music and the rap, the Bitcoin price. What you think about that? So epic as we start to dump to the box and the Bitcoin price. Sly as the fox hit the spot, we start to drop, coming back down. Don't you know we at the top, like the spot, like the Spock in Star Trek. Don't you know we do next? Don't you know we do it best? Only train arms and chest in the gym, about to get it in. It's leg day, doing it again. Walking through the squat rack, then I say take the weight off, then I put it back again. Cause you know we never train legs, arms and biceps only. Do the chest, upper body every single day in the gym, like we're at the treadmill getting paid, taking trades just to win, like we do it from a tray. Don't you know, ain't got no beat, ain't got no flow. Snare drum is gone, but now we're back again. Here we go, I'm so happy to trend. Eat, cleanse, trend hard, going far to the stars, spitting far as we're driving through our car over the fresh new farm. Yeah, we're going all around, hear the nice alarm. Bing, bing, it's going off, get out of bed, hit the tar. Gotta hit the streets, running on your feet. No matter who you meet, you know you're in for a treat. Cause we're Jay Casper in the house as we're looking for the box with the Bitcoin bounce. And we took the phone, then we get stopped out house. Then we start to pump reverse on the clowns, yeah. Now we get a little wick. The Bitcoin price up to her tricks, yeah, to the 786. Hopefully we don't get a big wick, and we come down, nice little flick. Will the beat drop? Yeah, again, the Bitcoin price is bouncing all around. Yeah, like we're looking for our friend Trend with the Benz, looking like the friends with the lens through the glasses as we're going fastest, driving through the car, and you know I'm about to pass this. You on the right, I don't do it right. Don't you know we're here for the fight. Got the boxing gloves on my hands, smashing through the land. We're driving the Bugatti from the sand to sand. You know I'm talking about the east-west coast with the beach, like we're eating oranges. You know we eat the peach and bananas. We got the apple. What do we drink when we're thirsty? Drinking Snapple. Got the peach sugar-free with the aspartame. Bitcoin price causing me so much pain, cause we're only dumb, we're never gonna pump. The bull market's over, it's a pain in the rump. We're gonna dump, we're never gonna pump. The bull market's over, it's a pain in the rump. Yeah, okay, I was feeling that, alright? I was feeling that a little bit. Black Swan, your legs are dead from lunges. Alright. Gma says to take off your shirt. Shout out to Gma. Shout out to the Mrs. Rabbi in the chat. What's going on, Mrs. Rabbi? Good to see you. God bless you. May Yeshua bless you. Man, guys, I have to be honest. I'm pretty much brain dead right now, all right? Did a 2-hour stream this morning. And Then I did a whole bunch of work around the house, around the yard. Now I've been working on a 3-hour stream this afternoon. We got so many super chats in here. I love all you guys. Thank you so much for the super chats. Oh man, I literally just took a long and then I got stopped out and now we're starting to pump. This was my trade, guys. What a fool, Jason Kasparovs. Look at this. This was my trade. I took the trade, stop loss below the low, got wicked out. What a fool. Should have put my stop loss below this. But, you know, I was trying to risk very little. But it is what it is, guys. Whew. What do you think? Are we going to hit the box? Let's see. We going to hit the box? We going to hit the box? Let's take another poll. We going to hit the box? Most people think we're going to pump today. I was hoping we would pump today. Are we going to hit the box? Are we gonna hit the box? Yes or no? All right. This will determine how I trade this now. Oh, man. Oh. No hitting box. That means no take profit on the short. You know, if we don't hit the box, I won't make money on the short. Dang it. All right, look at the Flop and Grope Show with Jay Casper. What's in the box? Good things. Good things. Just key support. The box is key support. Let me see what you guys say in the poll. We're going to hit the box. 50-50. 50-50. Man. Why am I dancing on a dildo? Are you talking about the mic? I don't know. Thank you for asking your question. I appreciate that question. Why are you dancing on a dildo? Shout out to XOK. We may drop more. Open the Pandora box. Man, I really hope we hit the box. I literally took a long. You guys know what I did. I took a long from the 786. I got whipped out, and now we're pumping again. Man. 10243 is an 886. 10243. So that's to the upside, you're saying, Dread Mining? If not today, then tomorrow. Shout out to Ancient Maya. God bless you. Crypto Sir 99900 looking for a bounce. Yeah, that's what I'm doing. That's what I'm doing as well. That's what I'm looking for as well. All right, guys, I'm gonna head out. All right, I can't. I wish I could stream all day and all night, but God bless you all in Jesus' name. Thank you so much for being here. May the Lord bless you and may He bless your families. And I'll see you guys maybe tomorrow. Peace.